talk about the cost of things. Bloomberg Intelligence expecting that insured losses from the California wildfires could be between 10 and 20 billion US dollars under some scenarios, saying it will be a large but likely manageable event for public insurers. Joining us now is Matthew Palazzola of Bloomberg Intelligence. Matt, it's good to see you, sir. Under difficult conditions over in Los Angeles, do we know what started this fire? Have we got any detail whatsoever?
As of yet, no. So CAL FIRE is really the source you go to for this, and they're saying still under investigation. I mean, I think they're still focused on, fighting it at this point, and usually that comes out it could be even months after.
Do we have a sense of what proportion of homes that were destroyed were actually insured by some of these public insurers versus either completely uninsured or insured by the insurer of last resort, the state?
Yeah. So in the main affected zip code, about 15% of those homes are in the FAIR plan. I don't have data on uninsured homes. Anecdotally, you sometimes hear these very, very high-end homes, maybe they go without insurance because it's so expensive. But, I mean, generally, they're mostly insured. So mostly insured with about 15% in the FAIR plan.
Can you give us a sense of just how many insurers pulled out of California in the years leading up to this because of some of the mandates coming from local legislation?
Yeah. So the biggest ones did. So State Farm has been pulling back. Allstate has been pulling back. A number of smaller ones have been pulling back. And what they've said publicly is wildfires, climate change. But Lisa, like you said, the regulatory climate there is very difficult for them to operate. So it is actually, I would think, the primary reason a lot of them pulled back. Just for an example, that FAIR plan, the state kind of doesn't run it, but gives it powers and kind of has power over it. They made the FAIR plan increase the limits that they take. Right, so they have to insure a higher amount. And the FAIR plan said, well, we need more rate, and then the state didn't give them as much rate as they needed.
So, Matt, take us from what has happened to what is likely to happen. Typically, after a tragedy, we see two things in the insurance market: higher demand for insurance, lower willingness to supply insurance.
Yep.
So what do you think happens here?
Yeah, no, I think that will happen here. I've got the kind of blue sky scenario that maybe this forces the state regulators to the table to work with the insurers a little bit more. It's probably an unlikely scenario. I think what happens is you will see a opportunity for the residual market insurance companies or excess and surplus insurance companies that don't operate kind of in the more regulated space to write these kind of more freer form policies. But I don't think this helps the cause in the state at all. In fact, I think the FAIR plan, the solvency of the FAIR plan could be at risk.
So when we are sort of trying to think about how quickly the rebuilding goes on, how quickly do we get back to a new sense of normal, do you think the insurance element is a big issue to think about or just a marginal issue at this point?
So I would say I think the rebuilding happens fairly quickly. You could look at like the Maui fires and we get to work on that stuff pretty quickly. I don't think we talk about, there was hurricanes last year and flooding there, and there's more of a chance that perhaps insurance doesn't pay for some of those things than with the fires. With these wildfires, they understand that it's risky and there could be carve-outs, so I'm not saying everyone gets coverage, but there's probably less of a question of insurance coverage in a case like this.
If the FAIR plan is insolvent, which is what you raised the specter of, and I just want to end there, this is the California program of last resort. They insure up to $3 million, I believe. A lot of these homes are far beyond that. Do we have a sense of what the necessity will be of California for federal financing to cover any kind of additional funding at a time when I think it's $700 million the FAIR plan has currently in financing?
Yeah, so the FAIR plan's financials are not exactly public, right? So we don't know the ultimate claim paying ability. They will, first step is they can access a line of credit. I don't know who's going to give them a line of credit. Maybe the state gives them a line of credit. Then they assess insurance companies, and they can keep assessing insurance companies, but once they get over a certain amount, the insurance companies can pass that cost on to policyholders. So there's a couple of things in the waterfall before federal funding. I'm sure some FEMA money comes in, but they have some kind of stopgaps before that happens.
Matt, thanks for your time. Appreciate it. Just devastating stuff coming out of Los Angeles and beyond. Matthew Palazzola there of Bloomberg Intelligence with an update on stories elsewhere this morning with your Bloomberg Brief.